All right, welcome everybody to the Closing Beat. Happy Wednesday. Hope you're having a good day so far. This is the Stock Market Show where we cover the good, the bad, and the ugly in the stock market there. I'm Dustin Tibbs, financial advisor with Jazz Wealth Managers. We manage long-term retirement investment accounts. We are SEC fiduciary registered investment advisors. Enough words there. And basically we put this show on just to update our customers as well as update you guys that are interested in what the markets did and just kind of general overview for the day. Off to the left, you happen to see how the major indices performed for the day. Another red day. The Dow down by almost 1%. The S&P 0.75%. The Nasdaq 100 almost down 1%. But it's how it happened today, right? So there's like an underlying story of a market trying to figure out if there's any support here. So we titled the video today that the stock market was showing signs of potential support, but there's a lot of like variables in there. So we'll cover them for you today. Off to the left, you see that chart there, the white one that lets you know minute by minute what happened in the stock market today. If you look closely, you can see a red dashed line that lets you know where we finished yesterday. So today you can see we started higher again. We sold off into the red, but at some point later in the afternoon, you can see that push where people said, enough is enough. The volume kind of came in and people ended up supporting the markets going into the rest of the day, although it was a little bit choppy. I want to lay the groundwork for kind of what's developing under the scenes here and then let you make your own opinion from there. But if you go back with us, if you've been around for a while, you know that when the markets move in one way or the other, I try to explain in terms of a bow and arrow and explain what's kind of going on so that when it does happen, you're not really shocked, right? I hate to be the guy that's like, I told you that was going to happen. I like to try to tell you ahead of time what's on the table so you know when it does happen, you're not shocked. When the media makes a big deal out of it or whatever, you kind of already saw it coming. So we're going to cover that today. Anyways, there's the stock market performance for the day. 205 points lower on the Dow. Huge swing. It was like 550 points from high to low if you follow the Dow. They always talk about that on TV because it's a bigger number. It gets your attention. If we were to say it was a 45-point swing in the S&P, like who cares, right? Nobody really cares. So that's why the media focuses on the Dow. Now, let's just dig right in here and kind of get this thing going. So if we move over to the charts, there we go. I did it right. Here's the S&P 500 on the screen. You see we're very much consistent in a downtrend. I put the line there for you so you'd understand what's going forward. But right in here, about the 2,700 mark, there's a little bit of support. Not only because it's the whole number, but you could also see today that volume kind of kick in at the lows. I'll just point it out. Let me go to a 5-minute time period. Very similar to that white chart I was just showing you. You could see that as we sold off throughout the day and went negative, there was an immediate V-shaped bottom here where volume came in aggressively. Those were people that said, I want to be in the market at this point. I want to add to positions or I want to buy that dip. Them, not me. And so you saw that quick recovery sort of rally. A lot of people joined the mix and then that was it. They were done for the rest of the day. And so anybody that wanted to finish in, by selling into the close was able to do that. Here's where I'm getting at. In order to see the S&P 500 bounce, you're going to need a couple sectors. You're going to need the banks. So let's start there. I'll use the XLF, which is the most popular banking ETF, if you happen to pay attention to that one. Today, the banks were weak again. Actually, Goldman Sachs made new 52-week lows 3 days in a row, by the way, that it made new 52-week lows. What was her name? Maxine Waters, a Democrat out of California. She's going to be the head of, I wrote it down, the chair of the House Financial Services Committee, and basically she said any deregulation in the banks is going to stop in January when she takes over as the head of that House Financial Services Committee. And so there's like really no deregulation going on in the banks. That's all done. So what investors were fearful about today was re-regulation, meaning new regulations being placed back on the banks. And so you saw a lot of them sell off. Here's the chart of the XLF. This is just the big banks as a whole, pulled back about 1 1/3% on the day. We know that the banks are sort of oversold in the short term. If you want to verify that, you can zoom down even further. It's called top-down analysis, by the way, if you're looking for the technical term. You start with the broad index, you move into the sectors, and then you move into the industries or the individual stocks from there. So that's all we're doing. We started with the S&P 500. We've moved on to the bank stocks as a whole to see what's going on. And now if we dig deeper into names like Goldman Sachs, you can see on the chart there, new 52-week lows, just selling off, obviously very, very weak. Morgan Stanley, very close to doing the same thing, but the longer-term picture is a very weak and oversold area, stock. If you look around at some of the other names, Wells Fargo, really not doing a whole lot. JP Morgan will probably get a little boost thanks to the Berkshire Hathaway news. We'll cover that in a minute. And so we know that these are all sort of oversold, not only in the midterm, but also in the short term. So we could potentially have buyers in the banks to take us into maybe the rest of the week or whatever happens. And so that would help with the overall markets. We need them to get things going. If we move over to the semiconductors, we know that they're oversold. They've been oversold. And now in the hyper short term, they're also oversold as well. So if we see a little buying in that category, you get a recipe for really that bow to be let go and the arrow to take off, meaning the markets to move higher. We've done this analogy before in the past. If we take it a step further and we look at Apple, that's getting all the headlines. Apple's selling off, it's being downgraded. They're not going to sell as many iPhones. Like, is it that big of a deal? Apple is not iPhones and iPhones only. They've been shifting away from that for a while, moving into services and other things that they offer. So even if iPhone sales slow down, they could still continue to perform, and I suspect that they will. Anyways, from a technical perspective, look at the charts. You've got a rapid sell-off here. Increasing volume during that sell-off, meaning people are giving up on the stock. That creates the bow that pulls back little by little, right? It keeps going and going. Just about the time you're ready to give up, they let go and it takes off. So if we have Apple even show a small recovery here over the next few days, that's also a recipe to grab the headlines, to make people go back to tech stocks. They'll see the banks moving higher, everybody participates, and it sort of builds this recipe for a rally. Let's take it a step further. If we go over to oil, energy is a big one. We need oil really to help, right? You can have a strong rally with the banks and the semiconductors. You can have a well-supported rally if you have energy and oil stocks participating along as well. Well, today, oil broke its losing streak. Now, to give you an example of this, I love the details. I love the stats. I'm always looking up things like this or trying to develop this on my own. Crude oil down 12 days in a row if you take away yesterday. It's never done that before. In the history of oil being tracked as far as a futures market, it's never fallen 12 straight days in a row. That's a record. Also, if we go back to the charts real quick, see this high right here. This will be back in first couple days of October. That's a 52-week high, something that a lot of people track. We mentioned 52-week highs and lows. This down here, what happened yesterday, is a 52-week low. Oil has never moved from a 52-week high to a 52-week low in such a rapid pace, 30 days to be exact. It has actually never happened. Well, and I can't say never. It hasn't happened since 1982, the year I was born, right? So that sort of rapid decline grabs attention. It makes people think, let me do a little more research here. If there's a sell-off and I can get a good price, I might be interested in buying it. Now, inventory numbers were delayed. So anytime there's a bank holiday on a Monday, we don't get the inventory numbers at 11. We got a hint of them just a minute ago. We'll get the rest of them tomorrow. They're delayed by a day, basically. So tomorrow's going to be a really active day in oil. If we go into tomorrow and people go, yeah, I get it, there's a lot of oil out there, but this is a good price for oil, and it starts to settle in this area, then you also have a recipe for a market that could be supported. So in the really short term here, you kind of feel like the markets as a whole start developing a more tighter trading range. If we don't rally and just kind of take off to this downtrend again, you get the feeling that we'll sort of bounce around and end the week higher than where we're at right now. Please don't make any decisions based on that. It's just my analysis, just what I like to point out, and sort of what we look at in the for the underlying areas. Now, one negative to that is gold. Gold had a good day today. Some of the better performance in the S&P 500 were gold stocks, gold mining stocks. Gold was higher by about 1% on the day. That's the safety trade. That's people looking at the CPI numbers this morning and going, maybe the Fed will recognize some inflation here and try to raise rates a little faster. If there really is inflation and they can't get control over it, people then want to own gold. You know the drill. You've seen the commercials. So gold having a decent day because of that. Newmont Mining was your best performing gold stock. This is a gold mining stock in the category. That was your best performer in the S&P 500. So inflation is the big, anytime you hear inflation or projected inflation or expected inflation, current inflation, or anything that says inflation is going to get out of control, people run to gold. And so you saw a little bit of that today. And that's kind of my sector overview, or going through everything from there. If we go over some individual stocks, we'll go back to Apple real quick. You can see that performance there. This is officially bear market, depending on how you track it or how you define bear market. Or correction, sorry, for Apple. The reason they say that, check this out. Dun, dun, dun. we go to the high, actually just go to the close in there. That's 20%, right? So you've got an official pullback here of 20% from highs to lows. Call it what you will, it's 20%. And so because of that, that's an area where people go, hey, 20% discount, let's take some action. If you've been waiting to own some Apple, if you've been waiting to add to some Apple, think about it. You go to the store and there's something that you've been waiting to buy and it's 20% off. That's a number that may make you act. 5% off is like how bad do I want it? They don't really want to sell it, whatever. 20% off really grabs your attention. Always think of the stock market in terms of physical valuables that you would buy. You go to the store and you want to buy a shirt. It's $50. That's ridiculous. You'd never buy a $50. I had these made. This wasn't even $50, but people spend that much on a silly old t-shirt. When the shirt gets marked down to $20, $15, somewhere in there, you can justify it. Now that's more than 20%, but you get what I'm saying. In the stock market, you want things to be discounted as long as your time horizon is further. I'm not going to go off into that rant because I get really excited about that. We'll save that for another day. Okay. Retail stocks. Now, these have been some of the stronger stocks out there. You've got, especially in the auto part retailers. Here, you can see it. Let's just do it. Advanced Auto Parts, new 52-week highs yesterday. Very strong. O'Reilly Auto Parts. Sorry. I did Advanced Auto Parts already. So you get that one there. Really good performance on that one. AutoZone at new highs. These are retailers, okay, so they get a lot of attention. However, today we had Macy's sell off and close below the 200-day moving average. Not good there. They did report better than expected earnings, better than expected same-store sales. Kind of succumbed to the overall markets there selling off. And because of that, you had other names like Kohl's. That was actually your second worst performer in the retail space today. Kohl's moving lower, and that takes a lot of the other names down too, even if they're not in that same category. TJ Maxx, that one was a potential breakout. Doesn't look like it's going to break out for the moment, but you get the idea there. If we move through Target, look at the charts of all of these. These are sort of the last little sub-mini category of the market where a few of these names are still really strong, and they're getting a little weakness there too. So, it's something to keep in mind. I just like to point it out. Snapchat, or Snap, down 3.5% today. The Department of Justice, the SEC, has subpoenaed them. They're claiming, based on a lawsuit that people have filed, that they misled investors prior to the IPO. What they misled investors about was how Instagram's sort of similar application was competing with Snapchat and how that was affecting the stock price. Investors are sort of pissed off at Snapchat at the fact that they would still try to snowball them and say like it's no big deal. The SEC is now involved. They're going to make sure everything is on the up and up, but I suspect that story will continue to linger in the headlines there. All right, JP Morgan, it was just released here 10 minutes ago, 20 minutes ago, that Berkshire Hathaway, Warren Buffett's company, has a 35.6 million share stake in JP Morgan now. Remember, Warren Buffett also owns the shares personally himself. He's always talked about that. We don't know, did he sell those yet himself? We don't know because he's like MIA, because he's working, he sees the market decline, he wants to buy stuff. So that was something that just came out that you may be interested in. Tilray, that was earnings related from yesterday. It ended up losing about 8.25% today. Just careful on your valuations there. I'll keep mentioning that. And Canopy Growth, there it is. Canopy Growth down 11%, right at the 200-day moving average. Same thing, right? It's like, oh, God, they're so expensive. Blue Apron down 4%. Here's a great example of a company that went public that shouldn't be public. Should have never been a public company. But when times are good, we can sneak these things by all the general investors, and they'll fall for it. They see the commercial, they buy the product, they've got the food in their house. Hey, it's a public company. They make good food. Maybe I'll invest in them. Well, the company doesn't make any money. There's a lot of competition out there. Everybody else can put food in a box and send it to you. So barrier to entry is not very high. Also, there's a lot of regional companies that do the same thing, where instead of waiting, you can just go and pick it up and have all the food you want ready to go with that all good to go. So you get what I'm saying there. They're going to reduce their workforce by 4% to try to become profitable. They're not profitable. They don't make any money. So how can you invest in something that doesn't make any money unless there's prospects of them making a really big chunk of money? That's just not on the horizon for them. Reducing the workforce by 4%. Interestingly, they lost 4% today, so that's not usual. That's kind of interesting. A couple other bank stocks. Citigroup, 52-week lows there. Bank of America, almost to 52-week lows. And so you can see the banks oversold here in the short term. Some of the healthcare stocks pulled back as well, all because of that Maxine Waters thing, maybe some more regulation for healthcare stocks. Look, that's just ridiculous. I don't do politics, I guess. Let's just stop. So Alibaba up 2 1/3% today. That, remember, is reversing out of the downtrend there. Short story, if you were to just draw a simple line, I know it sounds silly, but if you draw a simple line, that thing is trying to come out of its downtrend. There is a lot of stocks like that, which would also lend credit to the idea of a new little pop in the market, however short it may be lived. Tesla a little bit higher today, continues to hold near the highs. They're getting their act together. Facebook finally recovering a little bit, 1.5%, clearly in a downtrend. Is that trying to come out of a downtrend? Traders will eye this as a higher low, however, not a very impressive one. So if you're a short-term trader, it's on the radar, but you're not really, jumping up and down about it just yet. Twitter added 1% today. Marathon Oil, surprisingly, recovered a little bit. So that's in the mix there. And then you have some of the casino stocks trying to work their way out of the downtrends. Transportation stocks, okay today. I won't get too excited. American Airlines continues to move higher out of the way there. And home builders also moving out of their sort of their lows. Beazer, interestingly, yesterday Beazer had its best day in years, up on significant volume there. You can see the volume in the background. So that's really what I have for you there. Sorry if I missed any questions there. Yeah, Mary, the Mueller report, there were hints of it, right, that came out today. Interestingly, it didn't get picked up too much by the markets. It's the sort of drip effect. You know how you can, and the example right now is great. All through October, there was the drip effect of, is the economy slowing? Will rates keep rising? Is inflation going to be in check, or is it going to, sort of explode? And the more you drip information out to people, the worse it doesn't seem. Like, it doesn't seem so bad. So most people are on the same page now that maybe everything's slowing down. They're expecting less returns. See how they do that? The Federal Reserve is great at it. They start telling you ahead of time, we may need to raise rates. We have a projection. We may do this or that. The chair, Jerome Powell, Fed chairman, he's actually going to be speaking tonight. And they were analyzing today what he would say in his speech, like how they prepare it and how he's going to mention things, and that's going to have an impact on the markets tomorrow as well. I guarantee you see that on TV. Head and shoulder pattern, yeah, I like me some patterns now. That is right now, if you're a technical pattern trader, you can look at a ton of different categories or industries in the market and see that same pattern. So a head and shoulders pattern in really short just sort of refers to potentially higher prices. There's a lot of industries on the sort of undercurrents right now that look very much like that, and any technical traders going through going, hey, here's one, here's one, here's one, here's one, also lending more credit to the idea of a little market rally coming up there. You miss, hey, I bet if you had enough money, Smith & Wesson would make you a gun with some gold plating or something on there, if they don't already. It seems like something they would probably do. You got the Brexit discussions too going on there. Remember, so what happened today, if you hear all this stuff about Brexit, it was sort of dog and pony show. When the head of the person, Theresa May, who's trying to put this whole thing together, won't go in front of her own people, but she'll go in front of the cameras, it's kind of the dog and pony show, and goes back to the drip analogy where they keep dripping out this idea, eventually everything's fine. There's never going to be a switch one day and everything's taken care of. So I'm interested in her game plan there, because she wouldn't talk to her own people today. She talked to the media only, and to me that's a sign of weakness. But that's global stuff. I don't know if if you guys are into that, I can add more stuff into that, into the mix. But to me, it's something that a lot of people here probably don't get geeky about. I do. Dripping, yeah, that's the key word of the day, man. I like it. Is it a good idea to hold bank stock for the long term, like 5 years? I can't tell you what to buy or sell legally. I would say if you like a discount, we could both agree that that's a discounted sector, right? Severely, especially this year. Yeah, you can look up the estimates on any report ahead of time. Everything that the CPI numbers that came out today, what everything is expected to be as of the following report. So if it's a weekly report, you would already know expectations a week ahead of time. Analysts are pretty good about that. So that's a simple one to look up. Should you be nervous about Amazon? I don't. Why? What's to be nervous about? You think they're going out of business? You think something bad's going to happen? I think it's going to be a huge discussion about how they get so much in subsidies. Whether you're Republican or Democrat, is going to be a little battle there. But Amazon's going to plow through it. I mean, it's how do you stop that? Too big to fail, right? Well, hey, banks don't look too bad, right? The Fed, there's obviously stress tests that they're subjected to these days, and you know, we would know ahead of time, right? So I don't buy the whole argument that banks are getting us into trouble again. Banks haven't done anything, right? The banks are just out there doing what they do now with higher loan margins than they used to, just by a little bit. But you know, the whole regulation thing with the Democrats, I don't care what side you're on, but the whole regulation, that just kills me. Like, why do you want to hurt the banks? If they're doing everything they're supposed to do, why do you want to hurt them? If the gold mining sector is doing what they're supposed to do, why would you pick on them? Let them do what they're supposed to do. If they get like too big or they go mine too much gold and they go under, I get it, you know, stuff happens. Anyways, different topic. Does the aggressive portfolio include Chinese stocks? We have, there's no like one aggressive portfolio. We have an aggressive mix where we include lots of different portfolios, and the short answer is yes. Financial investors not buying your argument, man. You're on your own buying the bank stocks there. I'm always so calming. That's funny. I feel like I'm like a little ball of energy here. Pat says leave gold alone, man. What? You don't want to buy those gold coins on TV from whatever those gold companies are that get the celebrities to go out? You know why they do that, by the way? Little tip to leave you with. So you know why, like, we've had television commercials on sort of regionally, and that was cool. I just did something like this against the wall. We put it on TV. It was great. But you know why I don't have like a celebrity, right? I've mentioned celebrities sort of that are customers of ours. You know why I can't have them on TV going, I love Jazz Wealth, you know, they do this or that. It's not allowed. You don't see like Jimmy Johnson, the former Cowboys coach, on TV for, you know, some wealth management company, because it's not allowed. You know where it is allowed? Gold. So gold, they go out and they pick on all these older celebrities that sort of appeal to the older gentleman who's been through life and understands how gold could be a decent investment, but if we sell it to him with the Fonz or I forget the other guy's name, then they'll be more interested. It's because it's allowed. So yeah, not allowed from us. That's why you don't see hedge funds advertise on TV. Well, they don't need to, but you don't see these wealth management companies advertise with celebrities. Not allowed to do that. Bitcoin, yeah, hit a new 52-week low. Finally, it took a while. I mean, I don't know if you wanted it to hit a new 52-week low, but I sort of interested in that. You have basically, if we could show the chart, yeah, if we pull up the chart here, what you have is stop losses in its sort of mental, not in physical, you know what I'm saying. You have people that are giving up on it. You had an area here where your risk to reward was very, very good. I'm going to take a second to explain this and then I'm going to get out of the way. Think about it. If you see, I'm going to zoom in. If you see Bitcoin trading in a tight range, or any stock by that matter, it's moving really tight, and you say, okay, here's the deal. I'm going to risk such a tiny amount. I can have my stop loss down here. If I draw a line, you go, look, I'm going to risk this much. If it falls down there, I'll get out, right? And I'm going to get in with the potential of it breaking out over this. Look at how tight that window is, meaning the amount of risk you're taking relative to a potential reward is very small. So what you have, and this is something that all the technical traders teach. This is not like me giving you some kind of new rocket science information. Look at how tight that is. So on the chart. So if you were going to risk one to make, you know, however far Bitcoin could go, you've got a good justification to put some money in that trade and say, you know what, if it goes, I can make many multiples. Take that little red area as your risk and then multiply it here, here, here. You see how many multiple times your risk you could be making on that one? And so traders look at that and they go, you know what? It's a lottery ticket. I'll risk a little to win big, but if I lose little. And so that's all that happens. Over the course of a couple months, you have people looking at that going, I risk a little to make big. I'll bet a little more to make big. New traders come along and go, well, that's a nice risk to reward. However, when everybody loses, they all lose at the same spot and they all agree to get out at the same spot. And that's exactly what you see here. As soon as it trades under that, people go, my lottery ticket didn't pay off. I'm out. I'll take the small loss. Maybe I'll come back another time, but I'm not going to win many multiples of what I risked, and they're not going to hang on through all of this. That is the definition of a stop loss breakdown right there, if that helps you. We'll come back and check in on that at some point in the future. Anyways, any thoughts on Zillow? They got some work to do. Yeah, I mean, if you look at the charts, I mean, I know what you're already looking at there. They got some work to do as a company. They're doing a lot of the right thing to grab headlines and to grab more more real estate agents to pay to be on the platform. I think they've got some great ideas as far as monetization going forward. I don't think their whole we'll buy your house thing is something that they're going to stick with. And that was a big one. So as that sort of fades away, you have a valuation concern there, right? So I would see more downside for Zillow, just my little, insignificant opinion anyways. Anything tech related, your ATVIs, your Nvidias, there you go, yep. Weakness there, I will make the same claim, Michael. You have technical traders going, this could be a higher low. It's not amazing. If you teach it, if you look for it, you're not so excited by this higher low, especially given how short this decline's been. So from a technical perspective, I think traders will watch it. However, on the way back up, no one's going to look for this to rally back to the 200-day moving average in some quick way. So any traders that decide to play this higher low are going to take their profits quickly. And when people take their profits quickly, you get a lot of jitters, right? Stock goes up and then it's back down. It goes up, goes back down. And that's just people saying, I don't believe in this turnaround at the moment, but I do believe in a quick trade or a quick scalp. You even have big companies that do that, by the way. So it's not like I'm talking about individuals. There are whole ETFs that specialize in doing this. They are sort of what they call discretionary in their trades when they're actually able to take shorter term trades, and it's something that they do. So that's big money there. Calming so you don't jump ship. Hey, if you can't handle it, go ahead, get off the ride. Yeah, well, I hope Nvidia goes to the moon for you as well. I just wouldn't see it being an immediate thing. I think you're going to be invested there for a while. Yep. So that's all I have for you. We'll wrap it up there. Back to work for me. If you enjoyed or I helped you in some way, hit the subscribe button for me. I would appreciate that. Remember, next week, Monday, Tuesday, Wednesday, and then holiday, no dough show, no closing beat. We're going to take a whole week off. We're working on some great things here, and so we're going to play catch up with all of that. Go spend time with your family. It's going to be a really quiet market week after Tuesday anyways. It's going to be very slow, very quiet. So go enjoy, travel, do all the great things you do. I'll remind you again tomorrow that we won't be here, but I hope you enjoyed. And is that all I got for you? That's all I got for you. Enjoy. Have a good day.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.